Hi friends, and welcome back to Arctic Money channel. In this video we will take a look at my portfolio, review it, and last time I did this was in the summertime, so it is only fitting that we do one now for winter 2023 due to obvious transparency reasons. And I guess many of you, my viewers, really are interested what is actually in my portfolio. Am I putting the money where my mouth is, so to speak? So without further ado, let's get into it. Arctic Money performance during the 6 years I have been an investor myself, plus 42%. That is comparing to Standard & Poor's 500 index, that during the same time has done plus 57%. So yes, I am losing to Standard & Poor's 500 index. But if we take an index investor who invests the same amount of money every month during the same time I have been an investor, that kind of index investor is up plus 31%, which is less than what Arctic Money, my portfolio, is up. So even though I am not beating the Standard & Poor's 500 index, I am beating the average index investor who invests the same amount of money to Standard & Poor's 500 every month. And I'm quite happy, to be honest, of beating this kind of index investor. It means that my stock picking has done better for me. Of course, stock picking comes with lots of bigger workload than being an index investor, but personally I feel that being a stock picker has also trained me to become a better businessman. Also, it teaches you stuff that you don't learn in your everyday job, I would say. It teaches you how to look at things from a broader perspective, and stock picking is something I feel is also a learning experience, but luckily it has also been for me during these 6 years also better investing than just simply investing every month the same amount of money to a Standard & Poor's 500 index. I have done quite a bit better than that kind of index investor, so obviously I'm proud of that. I'm happy for it, and to be honest, I am not taking too much stress in beating the Standard & Poor's 500 index, even though I can say to you that that will be my goal, and that is my goal, and I want to achieve it rather sooner than later. But to be honest, I think it's more fair to compare my results to an average index investor, as I have done here now. And yeah, I have to say I'm happy with the results. I hope they improve in the future, but as they stand here, I am happy, and we move on from here. So before getting into my positions, let's talk about my cash position quickly. I have quite okay situation with cash now. In my opinion, I am ready to take advantage of any panic crash that would happen in the market starting today or tomorrow. I'm ready for it. When we were talking in the summer, I wasn't quite happy with my cash position, but now I have more cash and I feel good about it. This is the kind of situation I want to be right now. And of course, sources to my cash, obviously you get a monthly salary from your work, as many of you do, but also I have been a little bit taking profits on some positions since summer, and then one source of cash was slashing of Alibaba position, but let's go to the Alibaba in a minute here. So yeah, I have no clue where the stock market is going. Nobody has any clue of it. I don't spend too much time thinking of macro, but yeah, I feel like I always want to have a good cash position, at least in the kind of market we are living today. Even though I don't know anything about macro, I have no answer to you where the stocks are going next, but it is fair to say that some people more experienced than me, more wiser than me, are saying that we do have, if not overvalued, at least quite fairly valued market at the moment, and everything could be priced to perfection, and if something were to happen, some shock to the market, you might be able to get similar great opportunities as you last time did with, for example, in the COVID crisis when the stocks crashed. That was a time of making good money, and should any that kind of panic happen again, I feel like I'm in a position to take advantage of it, as I said. But that's about cash. Let's go through my positions now quickly. So I say a few words about each of them. Firstly, let's start with the biggest one. Sprott Physical Uranium Trust, 22%, and you can add Global X Uranium ETF 6% to it. So I'm 28% invested in uranium. For those of you who have followed uranium space, you know that uranium spot prices have gone up quite a big time during this year. That has obviously grown my position. I hope they will continue going up, as uranium is now my biggest position in my portfolio. And let's see, I feel like there's still room to go up, so I'm not selling at least today. Then second biggest position, or actually maybe really the second biggest position in my portfolio would be CoreCivic and GEO Group combined, so two private prison operators in the United States. They combined are 24% of my portfolio, so actually pretty close to the uranium position. Both of these two have gone up during the last year, and that's why the position sizes have also grown. But I feel like CoreCivic and GEO Group are still very much undervalued. Not adding at the moment to my positions, maybe, I don't know, to be honest, but definitely not selling yet. They are away from my fair value quite a bit still, so holding on to them. By the way, before I forgot to say, every position you can see in my portfolio now, I have a specific video of each of these companies. Some of them even more than one video on my channel, so if you're interested in any of these ones specifically, go and search that from my channel and you will find an in-depth analysis of each of them at my YouTube channel, Arctic Money. So, moving on. Then, one could say third biggest position, Alibaba Group, 15%. I have been a little bit slashing recently my Alibaba position. The reasons being tax loss harvesting, and I guess I have to admit kind of the China risk that is still there, has always been there. To be honest, I think my Alibaba position was always a little too big, to be honest, and I wasn't any more comfortable with it. It used to be a bigger part of my portfolio. I have now taken losses on part of that position, but I feel like 15% is something I still want to have invested in Alibaba and hope things develop so that we have peace in the world and nothing bad happens in regards to China. So to say about Alibaba, I feel the stock is hugely undervalued. If the worst things don't happen, Alibaba is undervalued, then I'm sure of it, but you can never know. You can never know, and as we have seen during the last years, we live in an unpredictable world and you need to be ready for everything. And this was not just something I did. I a little bit slashed my Alibaba position. Let's see, come next year, if Alibaba stock goes down for some reason or something, might add to it, but let's go with this sizing now as it is here. Then moving on, Flow Traders, 14%, has been rough times for Flow Traders position. It's a losing position I have. There hasn't really been much volatility in the market, and that has hurt Flow Traders revenue and profits. But I still feel like it's kind of a hedge I want to keep in my portfolio for those stormy times when crisis hits. Again, if something like COVID were to happen again, that would be the kind of environment where this liquidity provider, Flow Traders, would make lots of money, and that would nicely balance my my portfolio if all my other positions are taking a hit. So let's see if there would be, like it happened in COVID, that Flow Traders stock would boom, I might be able to sell it, possibly, and have money taken out of that and combine it with my cash position and then go and do additions to all of these other positions I have in my portfolio or in my watch list. Nevertheless, Flow Traders 14% was higher, but the stock price has gone down, so also the position size has gone down naturally. Then moving on, Carriage Services, funeral home and cemetery provider in the United States market. There was rumors that Parklong Corporation, their competitor, would be buying out Carriage Services. It didn't happen. The stock tanked. And when the stock tanked, went down, I bought more of Carriage Services, and I have now good 7% position in it. Issue with Carriage Services is debt. That's the danger around the company. Something I'm still constantly figuring out myself. How big of a threat, or can they handle it? And I think so far that they can. And that's why I want to keep that kind of position on Carriage Services at the moment. But anyone interested in investing in Carriage Services needs to take a look at the debt they have and start from their own research, I would say. Yeah, Global X Uranium, we already talked. Uranium combined with Sprott Physical Uranium Trust. I have the biggest part of my portfolio in uranium. Eurofins is a laboratory services provider from Europe, operating globally, though they have laboratories pretty much all around the world. 6%. I have also, the stock went a little bit down this year and I added to my position, so I have been growing that position lately also, Eurofins. Then I have Tyson Foods. I have also a little bit grown that, but it's still quite a small position in my portfolio. Let's see if the stock price keeps going down. I think I will be buying more of Tyson Foods too. Tyson Foods obviously is a meat company from United States market, the biggest one in that market. So yeah, more interested in Tyson Foods or any of these other stocks, go and have a look at my videos made specifically about them on my channel. And finally, Amsterdam Commodities, relatively new position, 3%. Waiting for that stock price. Actually, I hope that would go down, as I see Amsterdam Commodities as a really stable business, really stable company that actually is kind of a company where I would like to make a much bigger part of my portfolio, but the valuation which I have suggests that I am not willing to make an additional buys yet. I'm hoping for the stock price to go down, and surely let's say that with actually Eurofins, Tyson Foods, Amsterdam Commodities, especially Amsterdam Commodities, I'm pretty much approaching them similarly. So if the stock prices keep going down, I will be adding to those positions for sure, waiting for that to happen. But here was my portfolio, how it stands now as we approach the winter. I hope you enjoyed this portfolio review. If you have any comments, please leave them under my video and I'll be happy to answer them. And yeah, I hope you appreciated the perspective I wanted to bring to this video also in the beginning, that for me it would be cool to beat Standard & Poor's 500 index. Not beating it yet, but I hope in the near future I would. But I feel like for every stock picker, for every investor, it is more relevant to compare yourself to index investor with monthly additions to Standard & Poor's 500, because I think that gives you a bit more realistic picture of your alternative ways of earning through investing if you don't want to do the work that goes along with stock picking. That is nice comparison in my opinion, a fair comparison in my opinion. And you can take a look at, if you Google it, you have many websites offering these kind of calculators where you can calculate how much money you would have earned since you started investing yourself if you would have always invested in every month the same amount of money into Standard & Poor's 500 index. Where would you stand with that kind of decision making? As said, I am happy with my plus 42% at the moment. I am happy because I am beating the average index investor. That is kind of my, let's say, the lower limit which I want to beat, and someday I dream of beating the Standard & Poor's 500 too. Let's see if that happens. Let me know in the comments what you thought about my portfolio, about this video. Tell me if you have similar positions in your portfolio, and let's kick off the conversation there. Thank you for watching this video. I hope to see you in the next video also. Until then, bye bye.